Yes guys, Jess here, back with another video. You've read the title. This is very bad. So you can see initially on my Twitter I posted that we need to be holding this level of support at 92k, and we've exactly held it. We've actually got a bounce, but again guys, you need to be looking and keeping your eyes peeled. I'm seeing something big. I'm seeing some potential signals indicating a massive reversal. So I've got a lot of charts prepared for you guys in that short term there, and for the longer term, medium term, you name it, I got it. So make sure to be tuning in to the end, as yeah guys, we need to be looking at every single scenario, looking at what's likely, and you can see all that liquidity to the downside has been getting grabbed this week. We have some liquidity above us at 105k, so there's so many different charts to indicate that maybe we might go up, maybe we might go down. You might be confused, but I'm here to clear up all the different questions, all the different thoughts, and yeah, present you guys with all the scenarios. So before we get into the chart, make sure to smash up that like button. Let's try to get above 25 likes on this video. That'd be absolutely insane, guys. And with that being said, let's get straight away in towards this banger. Bow. And as you can see, we were crashing in towards this level at 92k, and it was likely that we were going to get some sort of reaction, as you can see over here, as we had previous reactions on this level, and crashing about 11% in a straight line always elicits some sort of bounce. Even if it's a lower high, it's likely that you won't just melt straight away down, as you've been grabbing all the liquidity here. So it's likely that there may be some sort of demand coming into that level at least, and that's exactly what we got. So we want to be evaluating whether we can actually break above our 97.3k resistance, which is the mid-range, looking at this previous inflection point over there where we had our rejection around the 102k level, and we plot the 50% level that gives us the mid-range. If we can actually confirm closing candles above at least 3 daily candles, it's likely we're going to be going to our range highs, and this was a massive trap. However, there is more that we need to be looking into the charts, because there's a lot of things actually pointing towards a potential further liquidity grab before we actually resume any sort of bullish momentum. So as you can see here guys, we have Bitcoin on the left hand side at the top there and Ethereum below it. Then we have the S&P on the right hand side and Nasdaq below over there, and we actually had consolidation patterns that were just similar across all of them, looking at this bull flag as they came from a previous move up, and it had a consolidation on all of these pairs over here. And as you can see, that the stock market had a little bit of a bounce as they came in towards the support, and then it started to break down, and same for the Nasdaq. However, crypto, so you can see Bitcoin is having that bounce now, and Ethereum's having that bounce, but we haven't quite broken down just yet. And this is looking like we might actually follow the stock market, where in towards next week, maybe we get a weekend trap where we get a little bit more of a bounce, and then we actually come and grab all the liquidity again below this trend line before we actually start resuming the uptrend again. So this is something to be watching for, because this is what the stock market is doing, and it'll be interesting to see how we close, because if we just came down and we wick back up, and then in towards next week the stock market starts pushing, we can actually get a rejection for crypto, and then we get the same thing where we grab all the downside liquidity, we get a bit more of a shakeout, and then we actually resume the uptrend again once we actually have some demand actually stepping in. So you can see that we had bullish divergence and we started bouncing, and we've been in this range for about 61 days. So the corrections actually played out quite well, as we had the bearish divergence, and we're actually forming this head and shoulders. So it may be a warning that we're coming down, but just focusing on the bearish divergence, it slowed the market down after we had a big push up, and we had a sideways choppy price action, and it's looking like it's likely that very soon we will resume the uptrend. But we just need to be seeing when it's actually the best opportunity to be getting to the market, because I do think that if we actually start crashing in towards this 90k region and this 89.4k level over there, filling this liquidity wick that I've been talking about for the last 5 videos at least, that's definitely a scenario that will be very bullish, because that would actually be shaking out the last participants in the market that are weak hands that are not willing to hold, and then we can actually look for that reclaim, and that will be the best opportunity to actually go long over there. And then you would actually expect us to actually resume the uptrend in towards that 120k mark that we've been talking about. So that's something to be watching for in the charts. I do think that it's likely we can actually come down and actually start resuming the uptrend again, but we just need to see how we close this week. We need to see the weekly candle. We need to see if we actually start going up aggressively. That would actually change a lot of things, where we have this resistance to be looking at instead. But if we just hover around this region, it's likely we could just bleed back down, just like the stock market, grab liquidity, and maybe that will be enough pain before we actually go higher. And if you look at the fear and greed index over here, we're in the neutral region, and we're not quite at the fearful state in the market. There isn't that much pain according to this fear and greed. So potentially, if we can actually dump and have that liquidity grab, I expect the fear and greed index to move into the 20 region, maybe the 30 region, where then that may be enough fear to actually shake out the weak hands. The institutions will be bidding the price. We will get a lot of wicks in that area. I don't expect us to spend a lot of time there. And then from that point on, we can actually resume the bull market again. But looking into this chart over here, you can see that we have this head and shoulders actually in play potentially. So if we actually break down from that 91.5k level of it just here, then you want to look at a potential breakdown in towards this golden pocket, which is just your head to your neckline. You take it to the anticipated breakout, and then you can see if we actually break down, that would take us in towards that 78.5k level, which lines up perfectly with your 382 and your 0.5 taken from this low at 51k over there, as you can see, and then it's taken to the highs at the head at 108k, and that perfectly lines up with your 21 weekly exponential moving average, and it lines up perfectly with your CME gap over here, which is ranging from the 81k level, and actually will be fully filled if we get to the 77.3k level over there. 98% of your CME gaps tend to get filled, so if we do actually activate that head and shoulders, I think it will be very likely we actually fill the gap before resuming a bull market, and still market structure will be intact, because if you zoom out, you can see we're still creating a lot of higher highs and higher lows. So if I go into the 3-day time frame over here, you can actually see that you have higher lows all the time in the uptrend, and it's actually quite bullish if you get this pullback as it flushes out the weak hands. And you can see every time we've actually resumed the uptrend after we have that macro higher low being put in and there's max fear. So if you were in the market long enough, comment down below, let me know. But what was the sentiment all the way when we were having these massive crashes and liquidity grabs over there? You can maybe cast your mind back and remember it was very, very bearish. There was a lot of people calling for the bull market being over, and that's the lowest risk, highest reward opportunities where you can actually look at taking some positions over there. Once you observe that there's actual demand, that can be one of the most profitable positions in the bull market that you can actually look in towards taking. Now, if we get the liquidity grab, or if we just rally from here, I do think that we're set for a massive, massive bull market due to the Trump inauguration. And you can see over here that I've plotted out a key date taken a week before he actually gets inaugurated. So he gets inaugurated on the 20th, and I've taken the window, so the Monday before that, Monday 13th, in towards January 20th. And then we're potentially going to see a push in towards that date, and then sell the news. And this is one scenario I'm keeping at the back of my mind. It may not be guaranteed that this actually plays out, but it's something that we've seen typically when we have big news in the market historically. So again, this is a scenario to be paying attention to. And you can see if that plays out, then it will actually create a macro higher low over here, which we've been pointing out a lot on the channel. So we want to see that actually maybe confirm, and then we can actually resume the uptrend over there in towards our 120k target, taking the base of the cup to the neckline and calculating that pole over there. It lines up perfectly with our 120k mark over there. So that's the level that I'm watching to see if we can actually get a proper pushing towards, and then we may consider talking about a local top. And you can see clearly that I've used that projected range highs to draw out this fractal over here, and I've talked about it so many times, so watch the videos for more on this. But you can see that we're holding our range quarter really nicely. And yesterday I was talking about if we can see a wick in towards this 90k level, then it's likely that this may be a higher low. We need to actually be keeping our eyes peeled, because this can be just a bull flag here where we have this compression and then a nice explosion in towards Trump's inauguration. Maybe we get that sell the news down, and then we resume one more push higher, which will confirm that 2020 fractal. And then you can maybe look at that seller may go away, and then we can maybe resume the uptrend where we come back to the range quarter again. But this is all speculation. This is just some scenarios I'll be keeping at the back of my mind. So it's likely we have to just react to what price is showing us. So the weekly close will be important, because if we close something like this, it's likely that the next weekly candle can actually be green over there. And if that is green, that can be a massive, massive indication that this may have been the bottom. But again, if we do come down, I do think that'll be a massive, massive buy in the dip opportunity. I'll expect a wick on that week, and then we'll resume the uptrend from there, in my opinion, where we can actually follow this LARP line to the T. So if you're enjoying the video and you want to be trading yourself, make sure to be checking that first link down below. If you check that first link down below, this will take you to this page over here, which is the sign up page for Blofin. Blofin are one of the best exchanges out there, guys. They are one of the lowest fees. They have Fireblocks, which just means that they have a third-party custodian so that your funds are more secure. So definitely be checking if this is available in your country. And I definitely recommend Blofin. These guys are really good guys. And if you agree with their analysis and you agree with my opinion, then definitely looking towards signing up with Blofin so that you can take advantage of this opportunity. And for some reason, if you don't want to use Blofin, then we got KCEX over here. So make sure to be clicking there. You can gain up to $9,000 in deposit bonuses as well. You get 0 maker fees and you got no fees on spot as well. And you have that 0 withdrawal fee 2 on all change, which is absolutely amazing. So if you're enjoying my analysis and you're liking my opinion and you want to be taking advantage of some of the information, then make sure to be checking if it's available in your country. And if it's available in your country, you can click that second link down below for KCEX. Now you can see for the longer term, we're looking really good. We're in the year 3 where typically you have that massive alt season, and I've been talking about this factor a lot on the video, so make sure to be watching my previous videos if you haven't already to be getting more on this. And speaking about altcoins, we have the biggest altcoin here, Ethereum. You can see that we're still confirming this massive uptrend, higher highs, higher lows, and we're potentially confirming an inverse head and shoulders over here if we can actually maybe form some sort of rounded bottom consolidation in towards this corrective phase. That will confirm the right shoulder, and it will actually activate once you break the neckline at 4K with volume and a lot of closing candles over there. So minimum 3 in my books. So 3 daily candle closes. Then you're looking for massive rampant expansion for Ethereum over there. And you can see that will line up with this fractal here where we're holding this massive symmetrical triangle support. So you would expect maybe a bit more consolidation, and then you'll expect a big uptrend there. And if we get that liquidity grab, maybe we'll come into this trend line a bit further, and that would actually confirm maybe a falling wedge where I'll be looking at bullish divergence on the lower time frames, which will just massively get me very bullish on Ethereum. It will confirm that right shoulder, and then we can actually expect Ethereum to actually move in towards our targets. And looking at our targets over here, you can see we have this cup and handle fractal over there, taking the base to the neckline. We've using a Fibonacci projection from our previous bull market highs to our bear market lows. And if we take the measured move over there, it lines up perfectly with that 1618 from that anticipated breakout, and then around that 7.4k level over there. So that's one massive one to be watching, guys. And you can see this parallel channel that's upward sloping with horizontal resistance points that are significant. Even if we do come down, you do have some support at 2.5, which I think is really unlikely over there. So maybe we can look in towards this horizontal one here, and maybe the way we come into this trend line will be quite gradual. Then it will be a big sell-off near the end that will line up with around 2.7k. Then we can actually get a massive push, and that will still be some sort of inverse head and shoulders that is quite slanted when you come to the right shoulder, but it's still valid as long as you can break above this 4k mark with closing candles with volume, and then you can tackle this upward sloping parallel channel over there, and then you will look to get towards this target at the top side. And speaking about Ethereum actually appreciating in price, if Ethereum actually breaks that 4k mark and starts going parabolic, we'll expect EPTC to be actually moving up aggressively, which will ignite the alt season. And you can see that the Bitcoin dominance is inversely correlated. So we have a rising wedge, and you can see by the hammers, every time we top on the Bitcoin dominance, it is a massive violent drop that is short-lived. So this is the time to be paying maximum attention. This is the time to be establishing your long-term positions. Whether we come down lower, that's just more opportunity. You need to shift your perspective and actually understand the data here. So yeah, guys, this is massive. We need to be paying attention over the next few weeks. So make sure to be subscribing, post notifications on so you don't miss any crucial updates like this video. So that'll be it for me. Make sure to be following me on Twitter to stay up to date with every single market development, guys. I'm posting all the charts on here, and some charts that I don't get to post on the channel I post on my Twitter. So make sure to be following me on here, and some of them that I do post on the YouTube channel and show you guys, you can have it here so you can save it for later. So yeah, that'll be it from me. Have a blessed rest of your day. Peace, guys. See ya. Bye bye.